Okay, guys, welcome to this today's webinar. We are so sorry about being about the technical difficulties that we were having, and we are late a bit. But trust me, we will compensate fully well, and we will discuss everything that we have in store for us today. So we are going to discuss everything that we have, and the topic will be finished in time. Well, of course, not in time, but we will finish the topic in any way, and we will also discuss many things about the topic, of course, but we will also give you some trading tips, of course, and I will also keep looking at the questions that you guys have. And as you can see, our today's topic is very exciting. So let me just take a look at the questions and everything. I want to ask you guys, do you think everything is fine? I mean, the voice is okay, the video is fine. Do you think the voice is okay? Can I please see a message from you guys if the voice is okay? And if the voice is okay, then we will start. Thank you so much for the message. Okay, Asha Singh, we are going to discuss that. No problem, we are going to discuss that. I think it's a very simple issue. I think the deposits are very easy, but you might need some verification. Okay, so Asha ji, please verify yourself first. I mean your identity first, and then there will be no issue in the deposits. So Aditya ji, thank you for coming. Okay, thank you guys, thank you very much. I got the idea that it's working fine now. Aditya ji, Bhatia Bharat, Rajiv Sharma, Manoj Patra, Rajesh Kumar. Okay, thank you everybody. Yogesh and Vinod Kumar, Himatari, Muhammad Taj Ali. Thank you. Rajiv Sharma ji, thank you. Audio and video both okay. Okay. Stanley Olissi, thank you for coming. Okay, so guys, I will go back and take your questions first. I just wanna take a look at this. Good evening. Okay, thank you guys. Good evening, sir. Well, sir, webinar start. Okay. So I don't see any questions. Aditya ji is saying we are eagerly waiting for your guidance. Thank you so much, Aditya ji. Thank you. That means a lot to me. So thank you for your kind comments. I will take a look at this. To draw levels of buy or sell using price action. Okay, Rajiv Sharma ji, we will discuss the price action in the upcoming videos. We have this topic. Okay. Great to see you, sir. Saeed. Okay, thank you. Trader Wild ji, Rajiv Sharma, actually I've created a strategy. Okay, thank you. Okay, so I am constantly looking at the chat box. So if you guys have anything, we will take a look and we will fix that. Okay, Stanley ji, thank you, very clear. Okay, hello Deep Kumar ji. Okay, so the card video is saying app is not working. Okay, so the admin will fix this issue. In the meantime, we are going to discuss our topic, because today's topic is going to be very interesting. Rajiv Sharma ji, thank you. So today's topic is about Bollinger Bands. What are the Bollinger Bands? So first, let me give you a rough idea about the Bollinger Bands. Now guys, you remember that the last time our topic of the LTS webinar session, what was the topic? The topic was drawing a trend channel, right? So if you guys remember, we were drawing trend channels like this. So first you will draw the demand line. In an uptrend, you will draw the demand line, and then you will clone it and put it on the upper side. That's how you draw a demand line, right? And how about the supply line? I mean, when the trend is downward, then you will first draw the supply line and you will clone this and put it on the other side. Okay, so this is how we put our trend channels. Guys, that's easy, I hope, isn't it? So that's easy. But Bollinger Bands are also a type of trend channel. But how? So, okay, so Subrata ji has a question. He is saying how to set target. Okay, how to set TP. Okay, so I am noting your question, Subrata ji. Thank you for your question. So this is question number 1. I will answer that later. Okay, a little bit later, because for now I will just address the topics and then we will go ahead. So guys, I am inviting you to, okay, how to set the target after entering a trade. Okay, yeah, we will discuss that, no worries. Okay, so we will discuss something about this, something like Bollinger Bands. Okay, so we will discuss in detail what are the Bollinger Bands, how to put the Bollinger Bands in your trading view platform, how to use them, how to design a strategy around Bollinger Bands, a ready-made strategy which I will give you, and then I will give you also some tips about the Bollinger Bands, entry and exit, both tips. Asha ji, thank you. And I will also teach you how to combine it with other tools. Then I will take your questions, and in the end I will also give you some live trading recommendations, because this is a live trading session, right? So without any further ado, here we go. Shall we get started? Okay guys, so we will go ahead, and I think I am going to discuss the Bollinger Bands first. So Rajiv Sharma ji, sir, I am able to enter a trade but not confirm about SL. Okay, Rajiv ji, I will tell you that. Okay, so the question is how to set SL. Okay, so that's question from Rajiv Sharma. Okay, Argya Mukherjee ji is saying how to draw supply and demand box. Okay, so I will call this demand zone and supply zone. Okay, so the question about demand zone and supply zone. Okay, so Bhatia ji, about the deposits, admin can guide you. That's very easy. Okay, हिना खलील इज सेइंग क्या ट्रिपल बॉटम के बाद मार्केट डाउन ट्रेंड में जा सकती है? Yes, of course, Hina Khalil ji. After the triple bottom, market will always go down, of course. So look at this. Today's market is also a triple bottom, isn't it? Or not triple bottom actually. It is triple. It is triple. It is triple top actually. This one is triple top. Okay. This one is triple top. So the triple bottom, no, the market cannot go down after a triple bottom. Okay, the market cannot go down after a triple bottom. The market does not go down after a triple bottom. It goes down after a triple top, but not after a triple bottom. Okay, sir, please provide link for live trades. Okay, so not the link, but I will tell you how to do it. Okay, how to do it. Okay, so please guide about deposits. It's done. Salinder ji is saying, Jai Shri Ram, sir, how are you? I'm great. Salinder ji, thank you. Sir, please okay, so Bollinger Band use for checking volatility and also work for checking oversold and overbought if it's based on 3 lines. Yes. I think Aditya ji, you are right. CAD JPY analysis. Okay, we will do the analysis in the end, not now. Okay guys, we will do the analysis in the end. First I will take your, first we will cover the topic, then I will take your questions, and then in the end we will give you the live trading recommendations. Okay, so let's go ahead, and first of all I will tell you that the demand and supply lines. So whenever you see an uptrend like this one, what do? When you see an uptrend, you will draw a trend channel, right? And you will first draw the demand line like this. Okay, so I will now, I think I should get rid of the EMA. Okay, so I will get rid of the EMA line so that it becomes visible to you. Okay, so this is how we draw the trend channel. Then I will clone this. Now remember, whenever it is the uptrend, you will take the demand line first. You will draw the demand line first, and then you will clone it like this. You will clone it and you will put it on the other side of the aisle. Okay, so on the other side there is this line. So this is how you put the demand line and then supply line. Okay, so guys, if we go for the demand and supply trading, or price action trading, trend channels will be useful. But sometimes you can see that the trend channels are not good enough. Sometimes you cannot draw the trend channels. So for example, over here, you can see that over here, it is going consistently up. It is just going up. Even though it is overbought over here, but it is still going up. So what do you do when it is going up? What do you do? Well, when it is going up like this, what you will do is you will simply do one thing. And what's that? You will go for the other channels, which is not the channel like this, because this is a solid channel. This is a solid trend channel. So the Bollinger Bands are the flexible trend channels, okay? When you draw Bollinger Bands, they are fixed. They are not fixed. I mean, they are the flexible trend channels. What time is good for intraday? Okay, I will take that question and I will write down timing for intraday. I will take some other questions as well. Double top, double bottom, then it is indication of end of uptrend or downtrend. Yes. Rajiv Sharma ji, you're right. The financial club, I'm not sure that where put order, buy order and sell position order. Okay, so financial club ji, please go and watch all the webinars because there is just too much. We cannot cover everything in single webinar. So please watch webinars and you will get the education how to do everything. Okay. Yeah, copy trading is real, but don't do it. Just do it on your own. Okay. Just do it on. Whenever you are trading, don't go for copy trading. Just do your own trading. That is a lot more fun. So guys, how do we draw the Bollinger Bands? How do we draw the Bollinger Bands? Now here you can see that you can check the oversold and overbought from the trend channels. But what do you do here? What do you do here? There can be no trend channel over here, right? How can you put the trend channel around these lines? So this is when we use the Bollinger Bands. And how do we use Bollinger Bands? You go to indicators first, go to indicators and write down Bollinger Bands here. And there is this Bollinger Band on the third, number 3. So you put this and there you have a Bollinger Bands. So these are the Bollinger Bands, okay? And what are the Bollinger Bands? And how do you tweak the inputs? Now here you can see that the market volatility is too much. The volatility is a lot. So I will get rid of the trend channel so that you can see everything. Okay. And you can see that there is a lot of volatility. There is a lot of volatility around this area. That's why the Bollinger Bands are also very big. You have big Bollinger Bands. When you don't have volatility, then you will not have the Bollinger Bands. That's very simple. Okay. Guys, it's a very simple idea that if you don't use Bollinger Bands, then you can't know how much volatility is there. So first, yes, they are used to check the volatility. And how do we know the volatility? Well, you can see that the bands are very small over here. In these areas, the bands are very small. That means the volatility is pretty small. It's very small, very thin volatility. And when the volatility increases, and what's the meaning of volatility? By the volatility means how fast the market is moving. Okay, that's it. The speed of the market is volatility. Up and down movement of the market is volatility. So don't get confused about volatility because it's so simple. So when you have this volatility in your area over here, what do you do? What do you do? When the volatility increases, you trade. When there is no volatility, don't trade. When the volatility is very small, just don't trade. And when the volatility is increasing, put your trade. Okay. So this is one tip. Which products are needed for trading? Vinod Kumar ji, you just need some good education. Okay. Dilip Kumar ji, good evening. So Vinod Kumar, you just need some good education in trading and some capital, of course, an account. So this is how you do it. It is simple to start, but the trading career can be very rewarding. But of course, you need a lot of education. Okay. Of course, you need a lot of education. So guys, this is how you use the Bollinger Bands. You first put the Bollinger Bands from indicators, and then you can actually also reduce or increase the size of these bands if you change the inputs. And how do you do that? Go to the settings over here. You have settings here. Go to settings, and you can change the colors if you want. So the basis is the line which is in the middle. So it is in the middle of the bands. So it is basically the average. It is the moving average, okay? So basis is the line, and then you have the upper line, the lower line. Okay, Rajiv Sharma ji, when you see that the size of the Bollinger Bands is increasing, that means the volatility is increasing. Very simple. You can know with so many things, but don't use other indicators. Just use this one. Okay. So, and I will also give you one more tip. Okay. So I will give you the tip over here when we talk about the timings. Okay. So please pay attention. I will later tell you when you will know that the volatility is going to increase. Okay. So you will know in advance. Don't worry about that. So what I'm doing is I'm double clicking this one, and then I have this Bollinger Bands, BB. You can see BB means Bollinger Bands. So you have inputs. You can increase or reduce the length of the input. You can increase or reduce the volatility. For example, if you wanna put it at 1.5, the size of the bands will be small. So look at this now, the smaller size. The size becomes smaller, okay? And if you just go back to 2, standard deviation of 2, then it will be bigger Bollinger Bands. Okay? So this is how you can increase or reduce the size of the bands. Now, on what thing does it depend? The size depends on what? It should depend on the market conditions. If you see that the Bollinger Bands are again and again becoming oversold, overbought, oversold, overbought, oversold, overbought, then you should change the size. Then you should probably change the size. And how do you change the size? Well, it's very simple. You can do it over here with the standard deviation. Now for me, I will put it at 2, the standard deviation of 2, but you can change it to, let's say, 2.5. So that's why if you change it to 2.5, you see, that's why the size of the Bollinger Bands has increased. You can reduce the size because I think it's too much. So I think I will go for the standard deviation of 2. I think that's good enough. Standard deviation of 2 is good enough. Okay. So now what I will do is I will go back to the other ideas about Bollinger Bands. How to design a strategy around Bollinger Bands. Very simple, isn't it? Very simple. What do? You just take a look at the oversold. And if it is oversold, remember guys, whenever it is oversold, it will react. And how does it react? It reacts by going to the other side. So let's say, let me give you an example, okay? So let's say this is the Bollinger Band, the upper side, the lower side, and this is the upper side, okay? So this is how the Bollinger Bands are going. And now let's suppose that this is the market, okay? Okay, so this is the market. So the market is going up. And if it is becoming overbought, then it will come down. Okay? Because it is overbought in the Bollinger Bands, it will come down. And if it becomes oversold in the Bollinger Bands, then it will go up. Okay? So if it goes up, it will come down because it is overbought. And how do we see the overbought? How do we measure the overbought? Well, let me tell you how to do it. If it goes like this, it is overbought, and then it will come down and it becomes oversold over here, then it will go up. So at this point, you will say it is overbought. Overbought, okay? So this is overbought. And over here, you have oversold, okay? So this is oversold. So when you have overbought and oversold, you can see that the overbought, it will react to the downside. After oversold, it will react to the upside. And then it might go like this. So let me make other Bollinger Bands like this. So this is the green one. I will make it green, okay? So this is Bollinger Bands and it is going up like this. So then what will it do? What will it do? So it will go to this level and go again. So this is how it will do. So you see, it is testing the Bollinger Bands. The market is testing the Bollinger Bands. And over here, you can see an example of oversold condition, isn't it? So this is oversold, isn't it? And you also have actually overbought. Where is it? Here you go, okay? So you see, when it is overbought, it is coming down. When it is oversold, it is going up. It is overbought again over here. Overbought again over here. It is coming down, but it's unable to go further down. Why? Because there is a lot of strength in the market. The market is shooting up, so it is not able to go down. ओवरबॉट तो रेजिस्टेंस के साथ भी होता रहा लाइव चार्ट पर. Yes, Hina ji, it does happen on the chart, live chart, of course. So you should be able to recognize. So look at this. So let me give you an example. Okay, so look at this one. This is overbought, isn't it? So I think Hina Khalil is giving this example. Hina ji, you are giving this example probably, right? It is overbought over here. It is overbought and then it is coming down and it is also touching the resistance, isn't it? And you can also actually draw the trend channels. So let's draw the trend channels. So we will draw black trend channels. We will clone them and we will put it like this. Okay, so it's not overbought in the trend channel, but it is definitely overbought in the Bollinger Bands, isn't it? It is overbought in the Bollinger Bands. Okay. So you can see that this point right here, it is overbought. This one is overbought. And that's why it is going down. After being overbought, it is coming down. Because that's what happens. When it is overbought, it will come down. When it is oversold, it will go up. You can see over here. Look at this. Oversold, going up. And then testing this yellow line, because it is the basis, it is the average. So it is testing the yellow line and then falling down again. Oversold, isn't it? Oversold, then going up again and then falling down. Oversold, then it is going up again and trying to touch this level and then falling down. Please send me the link or web version. Okay. Rajiv Sharma ji is saying, sir. Okay, Saurabh ji, pranam to you as well. Okay, so Rajiv ji was asking a question. So guys, the next thing, I hope you understand how to make the Bollinger Bands, how to use them, because when it is overbought, it comes down. When it is oversold, it goes up. Okay, so the next thing, I will give you a ready-made strategy along with the Bollinger Bands. So how do you do? First of all, the strategy that I will give you is this one. Okay, so this one. Strategy is pretty simple. What do you do? How do you do it? Extremely simple. First of all, check the background. Check the background first. Okay, Rajiv ji, wait, I will take your question. So first you will check the background. Is it going down or up? And then you will see if it is on resistance, so support or resistance. Okay, if the market is on support, then you should think of buying. If the market is below resistance, then of course you should think of selling, right? The third point, overbought or oversold in Bollinger Bands. Okay, and point number 4, check the reference line. Check the reference line. And in the end, you should have an entry bar, which can be one, it can be spring or UT. 2, it can be spring or UT, or it can be no supply or no demand. And number 3, it can be bag holding or end of rising market. So these 5 things, whenever you see these 5 things, you can buy or sell. And how do you do that? How do you buy or sell? So this is the general strategy. Okay, so this is the general strategy. Now how do you buy and how do you sell? That's a question, isn't it? So you will buy when this happens and you will sell when this happens. So first of all, if the background is up, you should buy for buying. Okay, if the market is on support, and if it is oversold in the Bollinger Bands, in the reference line you have heavy buying, and then in the end you have entry bar, which can be spring, okay, or no supply or bag holding. When you see this thing, you can just buy. First of all, if the background is up, and when all these 5 things happen, you can buy. Okay, if one thing does not happen, don't buy. So for example, first of all, if the background is up, you should think of buying. If the market is also on support, then you should think of buying. If it is oversold in the Bollinger Bands, you should think of buying. If in the reference line there is heavy buying, you should buy. And now if you have any one of these 3 entry bars, you can just buy, no problem at all. And how about the strategy for selling? For selling, you have this strategy. The background is down. Okay, the background is down. The market is below resistance and it is overbought in the trend in the Bollinger Bands. And then in the reference line you have heavy selling. Then you should think about these entry bars. Which ones? UT, which means upthrust, no demand bar, and the end of rising market bar. Okay. Okay, so Rajiv Sharma ji is saying, sir, what is reference line? Okay, Rajiv Sharma ji, I will show you what is reference line. Okay, so I will show you over here. So when the market is here, okay, so let me put a line. Sharma ji, just look at this. This is where the market is, okay? So let me disappear everything else, okay? So now, okay, background means trend, yes, or some strength or weakness signals, okay? Background can mean strength or weakness. Okay, so now suppose that the market is over here, okay? So what do you see at the back of the market? I'm explaining the reference line. What do you see at the back? What do you see at the back? When you look back, what do you see? This is buying or selling? This is buying or selling? This is buying, right? What do you see when you look back? You see that there is buying in the reference line. So this is reference line. Okay, so this is reference line. You look back, you just look back, there is buying. Okay, so let me show you one more thing. So for example, if the market is here, yes, Aditya Raji, you are right, there is buying, there is heavy buying in the background. Okay, so now we will look at the market when there is buying, heavy buying or heavy selling. So let's say if the market is here, I want to look back. So what do? I will look back like this, okay? And what do you see? What do you see in the reference line at the back? What do you see? You see there is heavy selling, isn't it? There is heavy selling. So if there is heavy selling, that means the reference line shows you heavy selling. So this is how you check the reference line. Okay. And here, if the market is here, I want to check the reference line. What do you see at the back? There is heavy buying, right? So in the back, if there is heavy buying, that means there is demand. At the back, if there is heavy selling, that means there is supply. Okay. So guys, this is how you check the reference line. It's very simple, isn't it? Very simple to check the reference line. So our strategy, what is our strategy? This is the strategy. If you see these things, you should buy. If you see these things, you should sell. Sir, please explain bag holding, NSND and end of rising market. Okay, so Mobile King Ji, actually these things I have explained in other webinars on the octafx YouTube channel. You can go and search my name with these topics. You will find topics, you will find webinars. We have done live webinars on these topics. No supply, no demand, end of rising market and bag holding. Everything I have discussed already. Unfortunately, here we don't have much time because we have some other things to cover, and then in the end I will also take your questions. And remember guys, I will also give you the recommendations about what? About the current market. So I will show you how to do the live trades, okay? All right, so let's go ahead now. So this is how we did it. The entry tips for Bollinger Bands are pretty simple when it is overbought or oversold. If it is overbought, you should sell. If it is oversold, you should buy. Okay? Pretty simple, isn't it? When you see it's overbought, you should sell. Okay, so Mobile ji, I already told you that we are going to we are not going to discuss this thing, sorry, because here we are running short of time. We have some other things to cover. I have already discussed all of these things in detail in my previous webinars. So please search my name with the octafx YouTube channel and you will see I have discussed all these things. You can go and study them from there. So how do you combine the Bollinger Bands with other tools? Now guys, do you remember last time we also discussed the Fibonacci retracement and we also discussed the trend channels. So how do we combine all these tools? Mukul ji, namaste, namaste, namaste. Thank you for coming, Mukul ji. Now, how do we, guys, how do we use other tools? You can combine it with the Fibonacci retracement, okay? So let me do it now. For example, if I want to use Fibonacci retracement, I can pick up Fibonacci retracement from here, and then what do you do? Well, you can go down and use from here, from this point. So let me remove everything, all of these things, because they are cluttering everything. So now I will use the Fibonacci retracement from here. So Fib retracement, select this one, okay? And you start from this point onwards and take it up to this highest point, this. And what do you see? The market is coming down and going up and then coming down again. So it is coming down to this point. That means for a long time, the market will not go down for a long time. Now, I'm not saying that the market will never go down, but for a long time, the market will not go down. Why? Because the Fibonacci retracement tells us that it is not going much down, farther down. Okay, so I can see some questions from you guys. Akim Ajaoji is saying, Akim from Nigeria. Thank you for coming, Akim ji. Thank you. Okay, so Mobile ji. Okay, Mobile ji, you can learn lots of things on this channel. Okay, on this octafx YouTube channel. Please spend time with the channel and you will learn lots of things. Okay. Guys, do you want to have a promo code? If yes, I will give you a promo code for a while and then we will continue, okay? Just let me give you the promo code. If you want to deposit, if you want to make a deposit, it will be doubling your deposit. So if you want to deposit $100, it will give you $100 more. So this is the promo code. Okay guys, so what do we do now? We will go back to your questions and I will take your questions first. And then I will also give you the live recommendations, okay? The live trading recommendations. So your questions first. Okay guys, don't forget this strategy. If you want to take a screenshot, please do, because it is going to be useful for you, okay? So first of all, how to set the TP and how to set SL. So these both questions are in a single question. Okay, so I will take them as a single question. I will take your question, and now guys, look at this. If you wanna, okay, so let me go down to 3-minute time frame because that will be much easier for me. Okay guys, so you can see that this right here is the test and this right here is another test. So the market is going down, is going up from this point onwards, and you can see that this one is oversold. So oversold over here and then oversold in the trend channel. So I think you can buy here. So guys, when you buy on this, where do you put your SL? Well, the rule always is that you should put your SL below the last low, beneath the last low. So where is the last low? This is the last low. So your SL will be very safe if you put it below this low. And where do you put your TP? You will put your TP on the resistance. So where is the resistance? The nearest resistance is this one. So your first TP will be this one. But then you can also put the other TP by looking at the other resistances. So for example, I will go back and I will look at the history of the market, and I can see that there is a resistance over here, right? So this red line, you can see this is the resistance, isn't it? Because there is the market. Okay, so let me get rid of the Bollinger Bands now. And now you can see that the market is over here. So if I want to put my TP, a bigger TP, then I think what I can do very easily is that I can put the TP over here. Okay, now you have it. So this is how you target the highest possible point. Okay, another example, if you want to buy over here, how do? You just buy it over here and put your SL below the last low. So where is the last low? Where is the last low? This is the last low, isn't it? So this is the last low. So you put your SL below the last low and you target the resistance. So this is the resistance. So you target the resistance. So this is how you can set the target. There was a question, I think, from Rajiv ji. From Rajiv ji, okay? Rajiv Sharma. So this is how you put your SL and TP. Another example. You want to buy over here. So in this case, I think you can just put your SL below the low itself, and you can target the resistance one more time. Okay guys, so Amar Khan, you want to see the promo code again? Okay, I will show you the promo code in the end. Okay, in the end, just 15 more minutes. Okay, I will show you the promo code in the end, no worries. How do we predict the market will be in range? Well, you can just guess that the market will be in a range or in a trend. Nobody knows for sure, so don't worry about that. Okay, you don't know, I don't know, nobody else knows, so it doesn't matter. If the market is in range, you should learn how to trade in range. If the market is in gold, is in trend, you should learn to trade the market in trend. So this is the support, right? So I want to sell over here. I will put my SL above the high, and then I will target this level. Okay, very simple, isn't it? I will target this level. You want to buy over here, for example. Where is the last support? Where is the last support? I think the last support is here. Over here, isn't it? Over here. There is a support over here, right? So if you want to sell, how do you target the support level? For example, you want to sell over here, you can sell here and you can target this support like this. Okay, yes, Stanley ji, yes. You can very well apply all these things if you are a swing trader. Whether you are a swing trader or a day trader, it doesn't matter, because the methods and strategies are pretty much the same. Of course, there will be a little bit difference, but the difference will largely be of psychology and rules and risk management. The difference in market structure is non-existent. There is no difference in the market structure. So Stanley ji, you can very well use all these strategies. Can you explain bar candle? Kumar ji, we just did it in the last webinar, which was on Monday. So today is Wednesday. On Monday, we had a webinar and I explained this thing, bar and candle, in that webinar. Please go back to that webinar and listen to that. Okay. Rajiv ji, welcome. Okay. So now there is a question about gold. Okay. So we will check gold. Don't worry. In a while, we will check gold. So guys, this is how you put your SL and TP. Okay. Now let's say you want to buy over here. Where do you put your TP? You want to buy here. You should put your SL below this level and you can target this one. Why? Because this is the resistance level, isn't it? So this is the resistance. So you just target the resistance. That's it. Very simple. Okay, we will also do the CAD JPY analysis. No worries about that. So I already addressed the first two questions. Okay, so I will remove them. I will take the question number 3 and 4. Demand zone and supply zone and timing for the intraday entries. Okay, so guys, how do you draw the demand zone and supply zone? How do you draw the demand zone and supply zone? Well, you can pretty much look at this. Look at this. So when the market comes down to this level, it's going up. It comes down back to this level, it goes up again, right? It comes down to this level, it goes up again. It comes down to this level, goes up again. So there you have a demand zone. So you call it demand zone. You call it demand zone. Demand zone. Okay. And how about the supply zone? Well, you can do it over here. You see there is this supply zone over here. Now, why do we say there is a supply zone at this level? Because whenever the market comes and touches this point, it just falls down. Let me show you how. So 1, it comes down. 2 comes down again. 3 comes down again. 4 comes down again. 5 comes down again. That means there is supply zone in this area. You have another demand zone in this area, over here. Whenever the market touches this level, goes up again. Comes down, touches this level, goes up again. Comes down, goes up again. Comes down, touches this level, goes up again. So you can see there is a demand zone over here. There was a question about demand zone and supply zone. Okay, so the next question is about the timings. So we already did this question. So now I will take question number 4. Okay. Sir, USD JPY, it is in long term, it is in buy zone in long term or not? Okay, Amar Khan, we will do that. Okay, we will discuss that. Please give me a minute. Okay, so timing for intraday. So what do you think is the good timing for intraday? Best timings for intraday trading are these ones. 1 hour before London open, 2 hours into London open, and 2 hours into NY open. So these are the best timings. Okay. Sir, if it hits supply zone or demand zone, then how to confirm that it will again react as a supply zone or demand zone? Yes, Rajiv ji, very good question, Rajiv ji. So how do you know? Okay, so let me show you how do we know. It's very easy. It is actually very easy. Look at this, Rajiv ji. Now please pay attention. Look at this. When it is coming into this level, it is reacting like this. So it is closing up, right? It is closing up. And when you see this bar, it is also closing up, isn't it? It is closing up. Not this one, this one. So you can buy. But now the supply zone, the demand zone, go ahead and look at this bar. It is also closing up, right? If it is closing up, that means it will go up. But if you extend the demand zone up to this point, what do you see? The bar is closing down, right? It is just falling. So it is falling into the demand zone. That means it will not go up. So you see it goes down and down again. In the same way, if you see this bar is going up, you don't sell on this. You see this one is closing down, and then this one is also closing down. Sell on this one. So you can sell over here. You put your SL just here and you can target this level. It will be fine. Okay, it falls down, then you see it is going up, but then it is coming down. So you can target this bar as well. So you can sell in this bar. What do you see in this bar? It is coming down, so you can sell in this bar. What do you see in this bar? It is coming down, so you can sell in this bar. So this is how you know. Okay guys, so the best timings for day trading, for intraday trading, the best timings for day trading are which ones? I already told you. The best timings are these ones, or these ones. Okay, 1 hour before London session, 2 hours into London session, that means 2 hours of London session, and 2 hours of New York session. That's it. These 3 things. Okay, these 3 things. These 3 are the best timings for you to trade. Just trade in these timings and that will be great. So these are the best timings. And Sharmaji, you had a question about the volatility. How do we know that the volatility will be high or small? Well, you can know that the volatility will be high in these timings, in these three timings which I have told you. So there will be bigger volatility. That means you can trade. Good opportunity for you, isn't it? Okay, so Akeem Ajao ji is saying, wait. Okay, GBP JPY. Okay, guys, now I will take your questions about the currencies. So first of all, we have a question about GBP JPY. So GBP JPY. Let's see what's happening in GBP JPY. Okay, so I will go to 5-minute time frame, and I can see that there is a distribution happening over here. So I will wait for the market. I will wait for the market to reach these levels and show the weakness. Now I don't see any weakness in the market. So I think the market can come up to this level, and I will wait. If the market shows something like this structure, it falls down, then I can sell over here. Then I will be able to sell over here. Okay. So this is how GBP JPY is. I will wait. And I will wait. If there is an upthrust, only then I will sell. And I think there is gonna be upthrust in this one. Okay. So next one. Last 2 hours of US session. No. Last 2 hours of US session are very dangerous. Anand Kumar Jain ji. Very dangerous. Please don't do anything in those last 2 hours. Ravinder Singh ji, we will do about gold. Okay. So NAS 100. You wanna see the index or the cash CFD? Okay, I'll go for index. Okay. So you can see that it is in a downtrend, and I will go to 1 hour time frame and I will see what's happening. Okay. So I think there was a distribution over here, and I can clearly see that there is a downtrend going on. So what I will do is now I will look for a selling opportunity. Where? Let me say probably over here. Okay. So it can be three possibilities. Okay, so Vignesh Shinde ji, the best pair for beginners will be, I think, Euro USD and GBP USD. Okay. So I will wait for the market to come up to this level, and then I will sell over here. And I think I will put my short position probably around this level. I will put the SL over here or maybe over here, and then I will target what I will target. I will target this one. Okay. So about the NAS 100, this is what I will say. Now let's go to USD JPY. Okay, so what's happening in USD JPY? You can see that it is trending up. I can make the trend channels like this, and I will probably make it yellow. I will put it over here, and I can see that there is an SOT line being drawn like this. So I want to see something more. Okay, so I can see there is a long-term resistance over here, another long-term resistance over here, and other long-term resistance over here, and the fourth one over here. Okay, these are the 4 long-term resistances, and the market is trending up. So I think it's time to buy. And how do we buy? Well, if the market comes up to this level, if the market comes up to this level, and then it shows some strength means, for example, it is going up like this and then coming down and then testing this level, taking a spring, then I will buy over here. And if I buy here, I will buy and put my SL here, and I will put my TP over here. That's it. Okay, so Jagdish Chandra ji, XAU USD gold. Let's do gold. Okay, Guys, let's do gold XAUUSD. CAD JPY. Okay, CAD JPY bhi. Yes, I will tell you. Oh yeah, there is clear accumulation going on in gold. So I think this is a good buying opportunity. Very fantastic. You can, I think I can buy either over here and put my SL around this level, or I can wait for the market. Actually, I can wait for the market. The market can come down to either to this level, one, or it might just come down to this level. So it will be a black trend line. If the market comes down to this level or this level, then I will buy over here. So it can be two ways. So let's say the market comes down to this level, takes a spring, then I'll buy. And if I buy here, I think I'll buy here. For example, I will put my SL here and I will put my TP somewhere around these levels. That will be good. In which time frame, sir? Amar Khan, this is a 5-minute time frame or 3-minute time frame? 3 or 5 minutes, both. You can do it in both, okay? XAU USD we just did, so CAD JPY. Okay, so Akim Ajao ji, odd USD disappointed me today. I expected it to go to this level. It is going up again. Okay, so it happens. Yeah, it happens in trading. Don't worry about that. It sometimes happens. Nothing to worry about, the Akim ji. Nothing to worry about that. CAD JPY. Okay, CAD JPY. I will check the CAD JPY. Okay, so I can clearly see that there is a distribution happening, and even though the market is trending up, but I am not satisfied with the trend because it is breaking this trend channel, and I can see there is a distribution because this is the level which has been broken. So now what I will do is I will wait for the market to fall down and then test this level, and if it tests this level, then I will sell over here. Okay, I will sell over here. Okay, so XAU USD in 1 hour time frame. Welcome Jagdish ji, welcome. Okay, so XAU USD 1 hour time frame. I think it's the same thing because it is accumulation going on. So I think there is gonna be a buying opportunity very shortly. Okay, I can see that it is falling, but it is stopping here. So probably it might start an accumulation on 1 hour time frame as well over here. Okay, so US 30, Dow Jones Industrial Average 30. So I can also say something about US 30. I think on 1 hour time frame, it is clearly in a distribution zone, or it might be actually a reaccumulation. So what do we do? Well, I think it is more likely to be in a reaccumulation zone. So I think I should wait for a buying opportunity around this level because I can already see a spring. So this is a spring and this is a test of spring. So if the market gives me another opportunity like this, then I will buy over here, and if I buy over here, I will buy here and I'll put my stop loss somewhere around this level, and I think I will target this. Aga Jansher Khan, thank you for coming. Aga Jansher Khan Saab. XAU USD we already did. Financial Club G we already did. Odd USD. Okay, odd USD. So this is how it is going on. Let's go to 5 minute time frame. It's a very clear downtrend. I think we should look for a selling opportunity. Where exactly? Let me tell you. So I will wait for the market to break this level. And then what I will do is I will wait for the market to break this level, and once the level is broken, then I will target this level. And what I will do is I will wait for the market. If the market comes down and it touches this level one more time, tests this level, and when it is falling, I will sell over here. I'll put my SL over here and TP here. That's it. Okay, guys, so I think we are done for the day today. We have discussed all the things that we wanted to discuss. I also took your questions. Thank you so much, Aga Jansher Khan ji. Thank you for coming. Akeem Ajao ji, we already did the odd USD. So this is where I will take a leave. I wish you everybody all the best, and I hope you are doing great and you will do much better in the future. Please get educated, and I think education is the best weapon in this game, in this market. Okay, so I think we are done for the day. I will take a leave here. Take care, goodbye, and I will give you the promo code one more time now. Okay, so thank you so much for coming, everybody. Take care and goodbye.